All eyes are on the US dollar this week, the world's currency. Its movements are closely monitored by investors, traders, and governments alike. Its value shifts ripple through global markets, affecting everything from oil to coffee. A small change in the dollar's value can lead to significant impacts on global trade and commodity prices. Investors and governments await the U.S. Federal Reserve's next move. The anticipation is palpable as everyone tries to predict the Fed's actions. The Fed, America's central bank, manages the economy by setting interest rates. These decisions are crucial as they influence borrowing costs, spending, and overall economic growth. These rates impact the dollar's value, influencing global trade. A higher interest rate can strengthen the dollar, making U.S. exports more expensive and imports cheaper. A stronger dollar makes U.S. goods pricier abroad, while a weaker one raises import costs. This delicate balance affects international trade dynamics and economic relationships. This Thursday, the dollar index shows slight movement, reflecting market hesitation. Traders are cautious, waiting for clear signals from the Fed. The Fed's annual symposium in Jackson Hole, Wyoming, is the focal point. This event gathers the world's top economists and central bankers to discuss monetary policy. Here, central bankers gather, and the Fed chair outlines future monetary policy. The speeches and discussions here can set the tone for global economic strategies. Mixed signals have created anticipation, a potential rate cut, or a steady hold. Analysts are divided, and the uncertainty adds to the market's volatility. The dollar's poised for a tentative gain, awaiting clarity from the Fed. Investors are on edge, trying to position themselves for any outcome. The financial world watches, waiting for the Fed's intentions to unfold. Every word from the Fed chair can sway markets and influence economic decisions worldwide. Until then, the global market holds its breath, pondering the dollar's future. The stakes are high and the outcomes are uncertain. The Fed's decisions will set the tone for global markets in the coming months. The ripple effects will be felt across continents and industries. The world waits, watches, and wonders about the dollar's path. The next move by the Fed will be crucial in shaping the economic landscape. Every August, the financial world turns its attention to the breathtaking landscape of Jackson Hole, Wyoming. But this isn't just a scenic getaway. It's the epicenter of global economic debate and decision-making. The Jackson Hole Economic Symposium is a crucial annual gathering where the world's most influential central bankers, economists, and policymakers converge to discuss the future of the global economy. Hosted by the Federal Reserve Bank of Kansas City, this event draws top financial minds from across the globe, all eager to share insights and shape policy. The informal, almost retreat-like setting encourages candid conversations and open debate on the most pressing economic issues of our time. The highlight of the symposium is the keynote speech by the Federal Reserve Chair, a moment that economists, investors, and journalists worldwide await with anticipation, hoping for clues about future policy. This year, all eyes are on Fed Chair Jerome Powell, whose words could set the tone for global markets in the months ahead. Speculation is swirling about a potential rate cut in September, with investors and analysts parsing every hint and headline for direction. Powell's speech is more than just words. It's the final clue before a critical decision, and the stakes for global markets couldn't be higher. A surprise move from the Fed could send shockwaves through financial markets, triggering rapid shifts in stocks, bonds, and currencies. The financial world is bracing for a rate cut, but uncertainty lingers. Even a steady hand from the Fed could unsettle markets more than a cut itself. In fact, if the Fed holds rates steady, the resulting shock could be even greater, sending markets into a tailspin. Analysts listen intently, searching for meaning in both what's said and what's left unsaid, knowing that every nuance matters. The outcome of Jackson Hole will ripple through markets, shaping investor strategies and influencing economic policy worldwide for months to come. More than just a mountain retreat, Jackson Hole remains a pivotal event, one that continues to steer the direction of the global economy year after year. Interest rates are key to understanding the dollar's value, acting as a powerful lever that shapes the entire financial landscape. When we talk about interest rates, we're really talking about the cost of borrowing money and the reward for saving it. These rates ripple through the economy, affecting everything from mortgages and car loans to business investments and government debt. The value of the US dollar is closely tied to these rates, as they influence how attractive American assets are to investors around the world. The Federal Reserve, often called the Fed, sets the federal funds rate, which serves as the benchmark for all other interest rates in the U.S. economy. This single decision can send waves through global markets. When the Fed raises rates, borrowing becomes more expensive for everyone: consumers, businesses, and even governments. This tends to slow economic activity, but it also makes U.S. assets more appealing to international investors seeking higher returns. As a result, investors flock to U.S. stocks, bonds, and real estate, increasing demand for the dollar and pushing its value higher on the global stage. On the flip side, when the Fed lowers rates, borrowing becomes cheaper, encouraging consumers and businesses to spend and invest more. However, lower rates also mean that investors earn less on their U.S. holdings. In search of better returns, investors may move their money to other countries with higher interest rates, selling off dollars and causing its value to drop. Right now, many expect the Fed to cut rates soon, which is keeping the dollar from rising too much, as markets have already factored in this possibility. If the Fed does cut rates as anticipated, the market reaction may be muted, since investors have already adjusted their positions in advance. However, if the Fed surprises everyone by holding rates steady, the dollar could surge as investors scramble to buy U.S. assets for their unexpectedly higher returns. Investors around the world are watching closely, ready to react instantly to the Fed's next move, knowing it could shift the balance of global markets. The Fed's actions will significantly impact the dollar's trajectory, influencing not just Wall Street but Main Street as well. The anticipation in the market highlights just how important U.S. monetary policy is for the entire world, affecting currencies, trade, and investment flows everywhere. The Fed's decisions ripple through global trade, shaping the cost of imports and exports, and influencing where capital flows for investment and growth. For anyone navigating today's complex financial world, understanding these mechanics is essential. It helps investors, businesses, and even everyday consumers make smarter decisions. The dollar's value serves as a barometer of America's economic health and global investor confidence, reflecting both current conditions and future expectations. The Fed's next move will set the tone for markets in the months ahead, influencing everything from stock prices to the cost of living. As the financial world holds its breath, all eyes are on the Fed, waiting to see how its decision will shape the future. The path of the dollar and the direction of the global economy will be shaped by the Fed's upcoming actions. The Federal Reserve's independence is under scrutiny. President Trump's public criticism of Fed Chair Powell is unusual. He pressures for aggressive rate cuts to boost the economy. This raises concerns about the Fed's ability to make unbiased decisions. Trump's political appointments add to the uncertainty. Investors worry about the Fed's future direction and credibility. The market remains calm, but long-term implications are concerning. The Fed's independence is crucial for economic stability. Central bank independence is vital for economic stability. It shields monetary policy from short-term political pressures. An independent Fed can make tough decisions to control inflation. Trust in the Fed ensures confidence in the U.S. economy and currency. Political interference risks eroding this trust, leading to instability. The Fed's independence is a safeguard for long-term economic health. Maintaining this independence is crucial for global financial stability. Investors analyze clues to predict the Fed's actions. They scrutinize Fed meeting minutes and speeches for hints. Economic data on jobs and inflation are key indicators. Strong jobs data may reduce the need for a rate cut. Falling inflation could increase the chances of a cut. Market prices reflect these expectations, with futures markets indicating probabilities. A rate cut is largely expected, but surprises cause major market shifts. Unexpected Fed actions force rapid asset repricing. Investors adjust positions based on Fed signals. The Fed chair's speech is a high-stakes event for markets. A few words can move markets by billions in minutes. The financial world watches closely for the Fed's next move. Global currencies tell diverse stories. Norway's krone strengthens with positive economic data. Strong growth attracts international investors, boosting the krone. Norway's economy contrasts with uncertainty in other regions. In China, bearish bets against the yuan rise amid economic concerns. Challenges in China's economy worry investors, leading to capital flight. Investors sell yuan for safer currencies, weakening its value. A weaker yuan can aid exports but signals economic issues. Norway's and China's currency paths highlight global economic dynamics. The US dollar remains central, but each currency has its own narrative. Economic health directly impacts currency value and investor confidence. Global markets are interconnected, with each currency influencing the other. The financial world watches these stories unfold, shaping investment strategies. Currency movements reflect broader economic trends and investor sentiment. Understanding these dynamics is crucial for navigating global finance. The dollar's role is pivotal, but every currency has its own impact. Cryptocurrencies had a quiet day amid Fed anticipation. Bitcoin and Ether saw slight dips, reflecting market caution. Crypto investors, like traditional ones, await Fed signals. Cryptocurrencies are intertwined with traditional markets. Fed decisions impact crypto prices, influencing investor behavior. A dovish Fed stance favors crypto, while hawkishness pressures prices. Crypto markets are not isolated from global financial dynamics. The Fed's actions will influence both traditional and digital assets. Global finance is a web of interconnected parts. The US dollar's value reflects global investor sentiment. The Fed's decisions at Jackson Hole are pivotal for global markets. Interest rates set in Washington influence global trade and investment. The Fed's independence is crucial for economic stability. Stories from Norway and China highlight global currency dynamics. Cryptocurrencies also react to Fed signals, showing market interconnection. The Fed's decisions impact everyday financial aspects, from mortgages to savings. Understanding these forces is vital for navigating economic life. The Fed's actions will ripple globally, affecting wallets everywhere.